Good morning, and thanks so much for tuning into the Trade Setup. I'm Neeraj Shah. Remember, it's a reasonably important day for the European region if you're looking at the global markets, because the European Central Bank will announce the outcome of its strategic policy review with a press conference followed by Christine Lagarde about 90 minutes later post that, and reports suggest that the ECB will raise the inflation target to 2% and signal that it will tolerate an overshoot if the situation demands it. So it's an important day for the euro, for the euro USD, and for the European markets per se, but that's only something that will come later on. For our markets, the US markets ended lower, yes, but I received so many messages about there being carnage out in the US markets. It wasn't carnage at all. This is very normal and pretty much to be expected. I mean, less than 1% kind of a correction can happen on any given day. So it actually it didn't end as badly as people made it out to be. Keep in mind, the only key point that people should watch out for, and I think there's this wonderful chart on the Bloomberg terminal which shows that to you, the US bond yields. And for people who follow technicals, I don't, but I would trust the Bloomberg terminal when they're saying that the US 10-year yield is near some key levels. It's shot down from key levels now, and it's resting at numbers from where it could typically tend to show some moves. At least that's what this chart indicates. So pretty interesting what's happening out there. Anyways, is Asia reacting to the US market corrective move? Remember, the US futures are trading flattish. Yes, but Asia is correcting. Nikkei led the losses down about 2% as I speak, but some of the others too corrected. And I have no doubts in my mind that the SGX Nifty will show a corrective move downward. So we'll have a start which is in the red for sure. I mean, let's get the SGX Nifty up on the screen. About 0.5%. It could be between 0.5% to 1%. So let's not get too perturbed about what will happen to the SGX Nifty. We will start off lower. Can this extend itself? Sure, it could. But remember, we also had a bit of a corrective move yesterday. So you have to bear that in mind. Now, what is the trade setup looking like? I think, yes, the global markets are weak. But as I said, they did not crumble. Therefore, the weakness in the Indian markets, excuse me, may not be staggering. So that's the key part. I think the sentiment seems to have shifted to a little bit of fear about a corrective move in the market. So many people that I've spoken to of late have spoken about this possibility that, if the markets will correct, let us sit on a bit of cash. So I think that feeling is already there. You have to keep that in mind. And I think, to my mind, just looking at the fact that the US has reported the highest ever increase in COVID cases, Japan has declared a state of emergency, Europe is reeling with Delta variant. In India, we have got one more strain of a virus in Kerala, the Zika virus. I think this whole conversation about value buying in reopening trades should be relooked at. You want to buy heavy, you want to buy certainty or near certainty as opposed to hope trades. This is my limited observation, really. So keep that in mind. Now, what are the key stocks that one should focus on in the session today? I think TCS unequivocally takes the center stage. Brokerages have come out and shown a bit of circumspectiveness, if that's the right term, when it comes to the TCS earnings. Let me first get in our guest, Sudheer Guntupalli. He's research analyst at ICICI Securities with his view. Sudheer, were you disappointed with the numbers, or are you sanguine about the prospects based on the commentary?
Yeah, Neeraj, thanks for having me here. So in terms of the numbers, if you see clearly, it's a mess. It's a mess both across revenue and across margins as well. Of course, the Indian geography, there's a sharp decline in the Indian markets because of the second wave and lockdowns related to the second wave, so on and so forth. But even if you adjust for it, one trend that you will note is that even if you adjust for the sharp revenue decline in the Indian markets, overall revenue growth would have been still in the range of 3.1%. Which is still lower than long-term, pre-COVID long-term average growth rates for TCS or for the industry in a typical June quarter. One should note this is seasonally the strongest quarter for the industry and the strongest quarter for TCS as well. In such a quarter, if you look at the pre-COVID long-term average growth rates, typically they would have been in the range of 3.5 plus. So even if you adjust for the second wave impact in Indian market, we are still looking at a growth in the range of 3.1%, which is still lower than the pre-COVID averages. So to that extent, yes, it's a disappointment. In terms of the outlook, a couple of points to note here. One is that management has cautioned about the outlook in Europe for at least another 1 to 2 quarters. That's a key point to keep in mind, because Europe has been a very good growth driver for TCS in the recent past, even before COVID and after COVID as well. And the second point is management has also indicated that most of the discretionary costs, including travel, should come back over the next 2 to 3 quarters. So for those investors or analysts who have been expecting structurally higher margins after COVID, this should be a key disappointment because if you see, most of the investors or analysts have been penciling in structurally higher growth rates and higher margins post-COVID compared to the pre-COVID levels. But this result and commentary in a way indicates that both the growth rates and margins are kind of reverting back to pre-COVID levels. However, valuations are almost 50% higher, 45 to 50% higher. So yes, definitely, it's a kind of a disappointment, especially given the fact the multiples are trading pretty high.
Right. So Sudheer, the stock will likely start off lower. Would you stay away from being a buyer? Would you advise your clients not to hurry and enter into a TCS in the session today or the next couple of days?
We'll not really advise our clients on such near-term trade basis. But my fair valuation.
No, entry points. What I meant was entry points. Would you believe that if there is a corrective move, it is a good entry point, or do you believe there are better options within IT itself?
So on the first point, I believe that the fair valuation of the stock should be 10% lower than today's market price. So accordingly, for you to be able to make money, there should be a sizable correction in the valuations. And the second thing is, yes, definitely there are some better opportunities within the sector at this juncture. Probably something like an Infosys, which is reporting a relatively stronger business momentum and trading at relatively cheaper multiples.
Sudheer, just one last question. We were doing this exercise yesterday about the 3-month returns of the Nifty IT components. TCS has lagged Infosys, lagged Wipro, and done only marginally better than HCL Technologies. Do you reckon that this outperformance that Infosys has shown could continue, because you seem to be more bullish on Infosys vis-a-vis TCS?
Yeah, so see, if you actually look at Infosys in terms of the numbers, in terms of the organic growth rates also, for the 6 quarters before COVID and for the 4 or 5 quarters after COVID, we have been clearly noticing a trend where Infosys has been outperforming TCS in terms of the growth rates. So, the share price is more or less a reflection of that fundamental outperformance. And going ahead also, I do believe that probably Infosys will outperform TCS by a couple of percentage points in terms of growth. And the valuations are slightly more favorable compared to TCS.
Yeah, in fact, when one look at the consensus, Bloomberg consensus of FY23 estimates, increase still a lot cheaper than TCS. Sudheer, great having you. Thank you so much. And we look forward to maybe talking to you once more, Sudheer, once all the 4 IT majors are out, to just do a bit of a dipstick about how do you feel of one versus the other. But thank you so much for your time today.
Thanks, Neeraj. Have a good day.
Thank you. You too. So viewers, that's the view from ICICI Securities. He believes that the TCS fair value is 10% lower. So even if it starts off lower, it may not necessarily be the best entry point. This is, of course, their view. But yeah, actually, speaking of views, let me quickly get you some of the other views on TCS as well, and then move on to the other stocks. So Citi, by the way, has come out with a note. This is UBS. Okay, let's check with UBS. UBS have maintained a neutral rating, the target price of 2345, but they are saying that the Q1 revenue is missed forecast, which should elicit a negative reaction. But the broader market concerns, COVID-19 wave 3, oil prices, etc., should keep the stock, or could keep the stock defensive, which means they are not sounding out a positive bugle. Similarly, I think Citi came out with a note which is not very bullish. The rating is a sell, the target price will be cut to 3080, and they believe, again, like Sudheer, that they find valuations high for an EPS CAGR of 7% from FY22 to FY23. Just keep in mind, viewers, JP Morgan has an opposite view. They believe that such things happen in a large company and their target price is some 3,600 or thereabouts. So different views there. But you heard Sudheer, if you agree with his rationale, hopefully it helps you. But as I said, TCS is not the only thing. Yes, it's the biggest game in town today, but that's not the only game in town. There are a few other stocks that all of us should keep an eye out for. Some small caps that we should monitor, or small cap, mid caps, whatever you call it. But Aman Offshore, a small negative news, I think they've received a possession notice from PNB for its assets for a loan recovery. The stock was up about a couple of percentage points. Not too many people trade or invest in this stock anymore, any which ways, but watch out for this one. Edelweiss, I heard that Rakesh Jhunjhunwala has increased the stake, so watch out for that one. And Bharat Dynamics, they've received a contract of 499 crores from the Ministry of Defense for supply of Akash missiles, if I'm not wrong. So I think that could augur well for Bharat Dynamics. Let's wait and watch. Any defense announcement these days, viewers, people tend to get very excited. So do watch out for that one. And watch out for PI Industries. A couple of media outlets have put out this report. I checked the BSE. There is no official announcement from PI, but I think the announcement is coming from IICT, which has said that body and PI Industries have joined hands to manufacture a COVID drug. And PI Industries is in the process of filing the application for getting the approval from DGCI, and they will subsequently manufacture and commercialize the 2DG, which is the name of the drug, from their facilities. So PI Industries, a specialty chemical firm, enters into manufacture of COVID. This is, it's getting interesting. But do watch out for PI. It's probably, if I'm not wrong, the most highly valued specialty chemical firm currently. You could actually say that it's also an agri-chemical company. Now, people could argue it's also a bit of a pharma-chemical company, but as somebody said, even pharmaceuticals at some point of time have a chemical background to them. So all of these are essentially chemical companies, and then they have different variations. PI has done reasonably well over the last 1 year or the last 5 years, what have you. But this is an interesting move from PI, so do watch out for this one. And I'll watch out for IGL. That's the other interesting one on which Credit Suisse has come out with a note. And they are saying that the rating is neutral. The target price has been raised to 550. They believe that the market is ignoring the increased capex at IGL for the new regions, where the return could be lower. They increased the EPS by 8%, 10%, and 10% due to the price increase and high volume growth from the new regions, but they maintain a neutral rating even though they've raised the target price to 550. So that's the other one that you should be monitoring today, viewers, IGL. And last but not the least, keep an eye out for the insurance data reactions. From whatever little I have read, the monthly insurance numbers, HDFC Life didn't have the best of months. I think ICICI Pru had a pretty decent month. I must caution you though, that insurance by and large as a sector is expensive, yes, but you probably should not look at it on a monthly basis. I think trends don't get formed on a monthly basis for insurance companies, so be mindful of that. Having said that, trading reactions could happen. You never know, HDFC Life could have a weak day today. So viewers, that's the long and short of it. The commodity players stay under a bit of pressure. Insurance players like HDFC Life could have some pressure. TCS most certainly will have pressure. So do watch out for TCS and the resultant impact maybe on some of the other IT stocks. But also keep in mind something that I posted yesterday, I think, or pointed out yesterday in the trade setup. Citigroup has opened a positive catalyst watch on Tech Mahindra. So you might want to look at which stocks you want to look at if indeed IT weakens considerably from a trading perspective. Thanks so much for tuning in. Stay safe. It's the weekend. If you are stepping out, please stay masked up.